Hey everyone, Anthony Venuto here with InTouch Mortgage Solutions. It's Friday, Finance Fridays, and on this mortgage update, we'll be talking about interest rates for the month of March as we get into the spring market. What are rates looking like today? Stay tuned, you don't want to miss this. For those of you watching on the Team Sessa YouTube real estate channel, once again, thank you for your viewership. Thank you for your comments. Don't forget to leave those comments in the comments section below. And if you want to book a free consultation with myself or Santo, you can do that in the description box as well. And while you're down there, don't forget to smash that like button, hit that notification bell, and share this video with a friend. But now, back to the video. As we kick off the month of March and spring is around the corner, a lot of clients might be approaching that mortgage renewal window. A lot of clients are approaching us for pre-approvals and a lot of questions around interest rates, what products are available, what lenders and solutions. And obviously on this episode, I want to take an opportunity to discuss some of the best interest rates that we're offering for the first week of March. As the market is obviously shifting, these bond prices can move either way in either direction and implicate or definitely have an implication on what those mortgages could look like in the following weeks or months ahead. But at the current moment, I want to start off by talking about insured mortgages. These are for purchases. These are for clients that are looking to purchase a home that is less than $1 million. The maximum amortization is 25 years. And for this particular product, because you're putting less than 20% down, you do require default mortgage insurance. So it's important to understand that these types of products have limitations, and depending on the lender, they may have further restrictions or stipulations involved, such as bona fide sales clause or abilities to not be able to refinance that product. All the mortgage rates that we are discussing are full frills mortgages. That means there is no hand-tied products where you're basically locked in. You are able to refinance them as long as you are able to pay the penalty. All fixed rate mortgages, when we're discussing them, obviously have an interest rate differential attached to that mortgage. So if you're taking a 5-year, 3-year, or 2-year product, if you're breaking that mortgage within that term, well, you must be prepared to pay a penalty. And the penalty is obviously determined by the actual contract rate or posted rate, depending if you're working with a top 6 bank, or if you're working with a mono-friendly or mono bank on the broker channel, which use their current rate. So obviously the bigger the gap between the actual rate that you have, your contract rate, and the current rate or posted rate will determine that penalty. And obviously understanding those clauses are very, very important. So when we dive into insured mortgages, it's obviously important to understand that there are significant advantages if you're able to qualify to purchase a home under an insured product. Remember, insured purchases are only for purchases. They're not for refinances, and they're not for renewals. We'll get into insurable products in just a moment. But insured mortgages are starting off this week from a little bit higher point than they were just a few weeks ago. We were situated around 4.59% just a few weeks ago. Now we've jumped up to around 4.79% on the best 5-year product that I could find. And then obviously those rates can range depending on the lender all the way up to 5.14%. And if you're looking for a variable insured, well, those discounts continue and you're able to find interest rates at prime minus 1%, 105, anywhere from 90 to 105. That is generally the going range right now that we're seeing online and with a lot of our lenders. So you're looking at a rate of from 5.75% to around 6.40%. Now shifting gears into insurable mortgages. Well, insurable mortgages are very similar to insured purchases. The major difference is that you're allowed to have a renewal option if you're coming out of one lender into this particular product, as well as if you're purchasing and you want to take advantage of some of the more aggressive rates. But there are certain limitations when getting into an insurable mortgage. Some of those limitations are obviously the ability to purchase at $1 million or more. An insurable mortgage, you have to still be able to buy that home at $1 million or less. And if you're putting down 20% or more, well, you don't have to pay the insurance premium. And that is a definite plus. And you can take a 25-year amortization or less depending on that particular product. So when you're looking at insurable mortgages, you're not paying that premium because the lender themselves will be paying that premium on their end in order to make sure that that mortgage is securitized on their end. So as opposed to insured mortgages where the client is paying the insurance premium as part of their mortgage, the insurable products, if you're putting 20% or more down, well, you have the ability to avoid that default premium take a 25-year at a more aggressive rate. Now, there is a little bit of trade-off. A lot of the lenders that are offering insurable products have a range or a hierarchy in regards to how they offer their rates. So basically, if you're putting down, let's say 20%, well, your interest rate will be a little bit higher than someone who's putting down, let's say 35% down on a 25-year amortization. So those interest rates are very similar to insured, and we're seeing them range all the way from 4.79%, once again, to about 5.14%, and variables going anywhere from 5.75% all the way up to 6.4%. So these are definitely interesting products. And the reason why this is an interesting product is for a lot of clients who might be approaching that mortgage renewal. Maybe clients that took a 30 or 25 years 5 years ago are now at either 25-year amortization or less, and maybe the interest rate that they're getting quoted on their renewals from their institutions are not as aggressive as banks and monobanks that are actually more aggressive, and might be able to switch them into these particular lenders. But remember, we talked about this on the mortgage renewal episode, where the discount has to make sense in regards to those costs to get out of the mortgage, what's being capped, legal fees, appraisals, so on and so forth. But insurable options are something that we're taking advantage of with our clients right now, especially those that are coming out of 5-year mortgages and they're going from 30 or 25 to 25 years and less. Now, obviously, if you're looking to refinance or purchase a home and you require a 30-year amortization, well, that is a different story. Then obviously you have to look at conventional lending models. Now, for conventional rate mortgages, we're looking at anywhere from 5.14% all the way up to 5.34%, and variable rate products starting at around 6.20% all the way up to prime at 6.7%. Some lenders are not offering a discount, but obviously this is dependent on the product that you're selecting or the lender that you're working with. Remembering that this is for a refinance, you can take a 30-year amortization on these products, and there is no insurance premium added, and the purchase price can be over $1 million. So for some clients that are making that leap into homes that are $1 million or more, or refinancing mortgages that are at $1 million or more, well, this product is basically what you would be considering in the conventional space. Now, just to take a quick second and jump back to insurable products, well, obviously there are some lenders that if you purchased your home, let's say prior to a specific date, like 2017, for example, and that home was well worth over $1 million, well, because there are that limitations with those purchase prices and those valuations that if they exceed $1 million, they cannot be insured. While there are some lenders that will work with them, especially if that home value is still over $1 million. So speaking to your mortgage professional about the options and solutions available to you at mortgage renewal time can help keep thousands of dollars in your pocket. Now, one other segment I want to introduce is the obviously 3 and 4 year products. And this is where we've seen the biggest shift in actual interest rates. Just a few weeks ago, the 3-year fixed rate mortgage was at 4.99%. Now that fixed rate mortgage has jumped up to 5.24%, all the way up to 5.44%. And on the flip side, we've now seen the 4-year drop to 4.99 to 5.19%, obviously depending on the lender, as a lot of this volatility has to do with the long and short-term bond market and how the bond prices are determined. So this is something that we're paying very close attention to, especially for clients that are approaching renewals. Something that we've talked about extensively is if that you have a mortgage renewal coming up in anywhere from 3, 6, or 9 months, is the best thing to do is reach out to your mortgage professional or to your lender to see what they can offer you and what they can hold a rate for and how long they can hold that rate for. Now, the last segment will be the discussion on alternative B lenders. A lot of clients who might be in this particular space, you may have heard of lenders such as Home Trust, Equitable Community, Excalibur, and so on and so forth. These particular equity lenders, or B banks, are definitely in the space right now, as many clients who might be approaching renewals might see significant increases in rates. The rates that we're talking about for this particular product are for new business only. Some of the interest rates that we're seeing are starting at around 6.49%, and they can range all the way up to 7.5% depending on that credit score. And keeping in mind that these lenders allow clients who have bruised credit, maybe their ratios are, or their servicing ratios are a little bit elevated, they're not able to purchase or refinance with their existing bank, maybe they're just not able to make those accommodations. Well, these alternative banks are offering those solutions at a slightly elevated rate. and obviously depending on that credit score. Now, it's important to understand that each one of these lenders has different products and different services with different criteria, but most of these lenders will offer products anywhere from 1 to 3 years, plus that 1% commitment fee that those lenders charge. Now, it's important to understand that these particular lenders, if you're approaching renewal with one of these lenders, you would have most likely had to engage a broker, a mortgage broker, to get into these lenders. So it's important to reach out to that individual if you're approaching renewals, because we are seeing a significant uptick in these rates at renewal time. And obviously, all the rates that we've talked about on this episode are for owner-occupied homes. Now, it's important to understand for insured mortgages, if you're buying with less than 20% down, well, you cannot have it as a rental property. So it's important to understand that in particular. So we've talked about the interest rates for the month of March. Obviously, it's important to advise our clients that these interest rates that we're quoting today could change by Monday of next week and further by the following week, as we hear from the Bank of Canada on March 7th. Keeping in mind that whatever Bank of Canada does, as well as the US Federal Reserve, does have an impact on the bond market and will definitely impact how fixed rate mortgages will be priced in the future. So we'll leave the video here. Let us know in the comment sections below what you think will happen on March 8th, actually. Will the Bank of Canada continue the pause, or will they increase interest rates? And what do you think will happen? Let us know in the comment sections below. But until next week, we hope you found this video helpful, and we'll leave the video here, hoping everyone has a great Friday and even better weekend ahead. We'll see you next week. Thanks for watching.